Welcome to Elevate Your Wealth. And today I'm joined by Bobby, and we're going to be diving into some financial and I'll say mortgage broking related strategies because we just want to ensure VLs out there are getting the best information out there. So we're going to be talking about debt recycling. We're going to talk about interest only loans within SMSF. We'll just talk about what sets the loan lounge apart as well. Obviously, I know that story, and I think it's great for the public to know that story.
Yeah.
And just anything else, So I'm sure people would want to learn about your hobbies and all that. So welcome today, Bobby. Thanks for joining us. And what is your story, Bobby? Tell us a little bit about yourself.
Thanks so much, Victor, and thanks for having me here today as part of your podcast. So my story is now I am a mortgage broker, and I come from a background of over 10 years in finance, in banking. I actually took a couple of years to go and do some not-for-profit stuff as well, and got to move into across Australia, across into Asia as well. But then during COVID, that all kind of got sidetracked, and so now I'm back in Sydney. But I grew up in Singapore, so first
See, I didn't even know that about you.
There you go. That's yeah. Moved here straight after high school, or rather, in Singapore, after high school, there's 2 years of military service you do, and so once that was done, I came over for university. Yeah. And I've kind of been here ever since.
Okay.
And loving it. This is home now, and I no plans to go anywhere else. And the self-employed journey happened, again, one of those COVID changes, as everything does, about 2 years, just over two and a half years ago.
Okay.
And so that's been fun, exciting, scary, all at once. But that's what got me here today in terms of stepping into what I'm doing.
Okay, nice. Yeah, the self-employed journey is very interesting. Obviously, we want to talk about business owners and how they can use some of these strategies. So it's good, obviously, being self-employed yourself, because then you get to really share how things work. I know you do have some hobbies, so I'm keen to explore that for a few minutes before we jump into things. So what are your unique hobbies, Bobby?
Yeah. So I would say I describe myself as a whiskey enthusiast. Yeah. By no means a connoisseur or expert or anything like that. I can't describe to you flavors. I just can tell you what I like and then what I don't like.
Yeah.
But it's one of those things. Again, during COVID, you sit around, disposable income.
Yeah.
And I initially thought wine, but then my wife doesn't like drinking so much, and so wine, you have to finish a bottle pretty quickly when you open it, and it would have been quite a lot to finish a bottle every 2 days. So don't encourage that at all. And so I thought, look, whiskey is one that you can take your time to finish it. It doesn't go bad in the way wine does. And so I got into that. And then I ended up finding communities on Facebook and different people who I knew were into it. And very soon, it escalated quickly.
Yeah.
So now, now I have to be cautious with how quickly my spending disappears into it.
Yeah.
But I really enjoy it. I need to budget, right? What I love most is the community aspect as well. There's a great community that's into it. So I love the chats we get to have around whiskey, and the flavors and just the friendship it builds. So that's what I love. Love sharing them with you too. That's been fun. We need to do more of that. So that's kind of one of my hobbies. They say when you reach a midlife crisis, it's cycling, it's golfing, maybe fishing. But I found whiskey, so maybe the least active out of all the hobbies I could have chosen. But hey, it's been so good.
Yeah. No, it is good. I think these days people want community, and if you can find it with a hobby, why not?
Yes.
So that's good. Thanks for sharing that, Bobby. So that's amazing. For some viewers out there, they might not know what brokers do. I still get people asking, okay, what do brokers do? What do financial planners do? So, what do brokers do? What do mortgage brokers do, Bobby? And what services can you offer?
Yeah, essentially mortgage brokers are the go-between between a client who's interested to get a property and all the lenders that are out there. And so the challenge is that within Australia, there could easily be maybe 50 lenders that you can choose from to get a property. And so that's quite overwhelming when you're on the journey of trying to find a property, and you don't know where to begin. And in terms of the time and effort required to go and figure out which bank has the best offer, interest rate, policies for you, that's a huge challenge. And so that's where the broker is able to assist by understanding each lender's specialty and understanding the client's specific needs at that point in time and connecting them with the right bank to meet their purpose. And so that's what brokers can help do instead of, a client having to go into check with CBA, with ANZ and Westpac. And many times in Australia as well, the banks hide their best rates from clients. And it's not until you're quite deep into a chat with them or an assessment with them that you find out what the best rate you can get is. And so that's effort, time, again, that you can save by going to a broker. And the good thing about brokers in Australia, how it's set up too, is that it's most of the time a free service for clients to use, because brokers get paid by the banks a commission percentage for linking the client with that bank. So the bank then gives a commission to the client, to the broker, and the client receives a free service for all of that. Now, I would caution that there are some instances where you may get charge fees. For example, today we're talking about SMSF, and that's a unique product which has a lot more paperwork and complexities involved. So that's where it's more common for a client to be charged a fee for helping to manage all of that paperwork and the admin behind getting a loan for that. But almost for everything else, it's very rare that a client ever has to pay for using a broker's services.
So, and that's definitely what I tell my clients, because I'm like, look, you're better off just using a broker and, them bringing and finding a better deal for you than actually you jumping from bank to bank. And I think that's even more important for small business owners and I think high performing professionals. I always talk about this thing called comparative advantage. You want to focus on what you do best and let other people focus on what they do best. So very strong advocate for, using brokers, because look, I use one and they add that value, which is very important as well, and very time saving.
Yes, absolutely.
Time is a resource that you cannot get back. So you definitely want to use that very, very wisely. Yeah. So you mentioned something about commissions there, which is obviously interesting. And I think what I know about the Loan Lounge, there's a huge difference there. So tell us a little bit about Loan Lounge. What's the difference? How that works?
Yeah, so Loan Lounge was started in 2015 with a not just a for-profit motive, but a for-purpose motive. And we say that we are about financing a difference, right? And what that means is simply that we care much more than just the bottom line about how much profit comes in. We care about also using the profit to find a solution to ending human trafficking. So the director who started it, Nathaniel, he from day one, he has set aside 10% of trail commissions that a broker would get and has been donating that to anti-human trafficking organizations. And since day one, since the first dollar, till today, we've been going and growing since. And his goal, our goal, is to one day be able to sustainably give $1 million a year towards ending human trafficking. And so that's actually quite a huge target. And again, not a once-off, but ongoing basis, right? So you would need to think about the size of the loan book that would need to support that. And we're slowly growing to get that goal. I would say right now we're about giving between 50 to 60,000 a year to that goal, which is quite amazing already. But we're still maybe 20 times off where we want to be. And so that's what's really motivates us. Sometimes in business, it's easy to get caught up in the numbers and trying to make them work and getting stressed out about all sorts of expenses and little things. But when there's a bigger purpose behind it, when there's a bigger goal and vision that's pulling us forward, it changes the perspective about why we show up each day. And so that's kind of why I love being a part of this team and trying to make that goal happen one day. I
actually think that's very amazing. Like even myself and CFV Services, we try to give from time to time. Every year I ensure we give, but it's nowhere compared to what you people do. So
we all start somewhere,
correct,
right? And trust me, the part that I play in that amount right now is not very significant. I'm trying to get there.
It does add up, but I'm a strong believer of, trying to almost pay it forward and helping for causes you care about, because if we all do that, it makes the world a better place. And
Yeah.
I feel if every business owner, every high performing professional can give just a little bit,
Yeah.
not a significant amount,
Yeah.
because you need to factor that into your budgeting.
Yes.
But it plays a huge part. So kudos to you people on the team. I think that's amazing. So in terms of the Loan Lounge now and helping small business owners, high performing professionals, how do you people go about delivering, some complex strategies around that debt recycling and helping clients with an SMSF? What does that process look like?
Yeah. So today we'll focus more specifically on helping self-employed individuals and maximizing the strategies you can use to grow your wealth, right? And do it through your business lens as well, which is a unique way of growing aside from your personal borrowing, what you do, right? So I think it just comes down to ultimately starting with what is the goal in mind. When clients come to us, they usually have more of an idea of what they want to do, be it to purchase a new their third or fourth investment property, and maybe they've reached a stage where their personal borrowing has been capped out, it's maxed out, right? But in Australia, the name of the game is property, and you're always trying to leverage more, and so when you're leveraged to the max, then it's like, okay, how do I ensure that that's done well first to begin with? So debt recycling can help a lot in that, getting your leverage as much as it could be in your personal name. And then where that ends, it's okay, what else can I do? And now SMSF, using SMSF to invest in property, be it residential or commercial, has become a big thing, because that's another way to get another way to purchase a property and to keep growing and building your property empire, so to speak. So that's what we can, in general, to help with. But do we need to talk about debt recycling? Do people have an idea?
Good questions. So for viewers out there, debt recycling, I'll make it as simple as possible. It's a simple concept where you're moving non-deductible debt and making it deductible. Generally you do this over a certain period of time on your principal place of residence, because whatever interest you're paying now on your principal place of residence is not tax deductible. So on $1 million loan, you can imagine you're going to pay over the course of 30 years about another million or 1.7, depending on the rate, as interest. So if we can keep some of that, and help you build wealth with that, that's a huge benefit. So debt recycling is moving that non-deductible debt, making it deductible, and helping you invest with that. So it's good that people just know what it is, and from a lending perspective, that's what you people help with. You help with topping up that tax deductible debt and helping reduce that one as we kind of just move things around.
Or as Victor would say, probably said before, smart debt, right?
Correct.
Making the debt work to create a revenue-generating asset or appreciating asset in the future. I thought I'd just give a really simple example for clients to understand,
please,
right? So if you've got an owner-occupied home loan, right, and let's say there's $200,000 left on your home loan, and over the years you've built up your offset account balance, your savings, to be $200,000 as well, right? And so now your loan size matches your offset balance, and you're trying to think, okay, I want to purchase another property now, and I've got this $200,000. How should I use it, right? You might traditionally think, okay, I'll use that $200K in my offset as my savings. I'll go and make a deposit, use it as my deposit for my next property, which you can, and that's fine, right? But debt recycling, the principle behind it is like, okay, that $200,000 you spend, you can't claim any interest on that. So the way you should go about getting your next property is instead to pay off your existing owner-occupied home loan balance fully, right? because your own place of residence, the loan on that, you can't claim any interest on it. And then you take out 200K of equity in a loan from your property, because that loan is then an investment loan for the next property that you purchase. And the 200,000, that balance and the interest on that is fully tax deductible.
Yeah.
So that's the concept of debt recycling, a simple example. I hope that makes sense. If you need to understand what benefits, an accountant is the best person to talk to on this.
Yeah, exactly.
But
yeah. So one thing I always do with clients, especially if we're in Zoom or if we're in my office, I'll draw a few diagrams. So obviously we can't do that now, but that really just helps explain the concept. I think it's a wonderful tool to use or strategy to use for people in Australia that love property. Because I do think property is a good investment, but you really need to diversify and build that. Build more diversified wealth over time. So one thing with debt recycling, in terms of the mechanics of that, they need to sit down with a mortgage broker almost every year to increase the tax deductible loan and kind of reduce that. And as you said before, we really want to keep those separate.
Yes.
So it's very easy for the tax accountant to do your job, saying, okay, all that's your tax deductible loan, and all that's your non-deductible. How easy is it from a mortgage broking perspective to increase the tax deductible loan?
Yeah, it's quite straightforward, as long as the asset appreciates in value.
Okay.
Yeah. So, which in Australia it seems to be right now going the right way for most properties. I mean, that's in general what's been happening. And each year, as your property increases in value, you can revalue the property. If it goes up again, that just means there's more equity that you can access. And when you withdraw that equity for an investment purpose, your next property or to make additions or renovations to your existing investment properties, that just means that, again, that tax deductible, the interest on that, what you withdraw is also becomes tax deductible and a way to maximize that.
Yeah. So generally, and even because we're reducing the non-deductible debt and increasing the deductible, generally, if let's even assume the property hasn't grown in value, and hopefully it has, and their incomes have remained the same, they should still be able to borrow because it was reducing one and increasing the other.
That's correct.
But generally, you would have to go through the normal borrowing capacity and increase or loan top up.
Yes.
Process with the client, correct?
That's correct. Yeah. So what you mean is again, as your savings or your offset builds, again, pay off your existing loan and then take it out as on the investment side. Yeah, that's a way to increase the tax deductible percentage. Yeah.
And I think for viewers out there as well, generally you can do a debt recycling strategy on an investment property, or you can use a diversified block of shares for that, which is actually very beneficial. I think you want to use the shares to diversify away from property, not to have too much.
True.
However, you can actually use both, which is really good. Yeah. I guess for business owners out there and, some professionals, because some high-performing professionals, they don't usually get lots of your pay in as a salary. It might come as dividends. It might come as, them receiving shares. So they might have to use things like low doc.
Yeah,
okay?
That's correct.
Just for viewers, what is low doc? How easy is it to top up your loan on low doc if you're doing a debt recycling strategy as well?
Yeah, so low doc is a great financial tool for self-employed clients where instead of having to submit your entire financials to get a loan approved or a loan assessed, it's meant to be an express way of a bank assessing what your anticipated or estimated income is. And so all you need to do is submit just either your most recent BAS or even an accountant letter stating what your income will be for the year ahead or the year that's just finished, depending on where in the tax cycle you are. And by using that alone, you're able to then go and get a new loan for a property instead of having to wait for the right period. Submitting company tax at a certain time means you're liable to pay those taxes, and then your personal returns as well. That means you have to pay within a certain time, and so timing is the name of the game for the property market. So doing it via LowDoc helps you to get in quicker with less paperwork involved and less financial shells. But it also does mean LowDoc the bank does have a higher interest that they
Interest rate,
charge
yes.
for that convenience and that risk that's a little bit more from approving a loan without the full financials.
Yeah, yeah. I think it's a great tool as well because, think about businesses or business owners that have just been running for 1 year. They might not even have got into doing the tax returns.
Yeah.
They can access LowDoc and actually get into the first property.
Yeah.
And even fast forward that a few more years where there was a huge revenue in 1 year because the business has really grown.
Yeah.
They can't use last year's tax returns, last year's financials, and so that's a good opportunity for them to actually get into the property market. Yeah. So, do you actually see lots of people employing such LowDoc strategies?
Yes, very common, and simply because, as you said, right, business can vary so much in terms of the turnover and profit from year to year, and the volatile nature of the economy right now just means that financials year to year are not as stable. So using LowDoc is to your advantage when your recent performance has been much healthier than it was, and it just opens up more paths, and again, quicker access to market if there's a property that's that you're really after. So very common to see that, very common to assist clients with that. We're just using the BAS.
Yeah. Well, that's really good, and because even when I started my business about 3.5 years ago, I didn't know about that until about 1.5 years. So there's so many people out there starting businesses or just running businesses that have no idea. So it's definitely good for them to know these strategies do exist. Just moving on to the SMSF space, I think is a very interesting space. I actually love helping clients set up an SMSF and helping them to make the right decisions within that. One of the things that may come up from time to time is people asking about interest-only loans within an SMSF. Do you see much of that? Any pros or cons to actually having an interest-only loan in an SMSF? And sorry, for viewers out there, an SMSF is a self-managed super fund. So that's when you are then taking ownership as the trustee and managing your fund rather than having an external trustee manage that.
Yeah. So SMSF is for property setup so that you can get a asset that you can, when you retire, you can depend on the cash flow or the revenue you make from that asset. And so there definitely is interest-only loans offered on SMSF. Like every home loan out there, the interest-only option exists, right? So interest-only simply means that for the first up to 5 years, you're not paying off the principal, you're just paying the interest. So in that interest-only period, your monthly repayments are lower than if you were paying principal and interest, right? Because you have to pay the balance plus interest on top, whereas interest-only is just that portion. Although at a slightly higher interest rate, right? So the same reasons you would do it in SMSF are the reasons you would do it outside. Simply, what's your purpose of acquiring a property, right? Is it to get the capital appreciation on that asset, and then you eventually plan to sell that property away to just make that gain? Or do you want to hold on to that asset at the end of its life, or and the rental income that keeps coming in to use that to your advantage? And so this is, of course, where pre-talking to a broker, you would have a chat with Victor, a financial planner and accountant, a good accountant as well, because setting up a SMSF involves both of them first too. But secondly, it's more the strategy to, okay, which product should they take, an interest-only or a principal and interest one? So again, getting interest in SMSF is interest-only is available. I wouldn't say that's common to see because sometimes people take out interest-only loans for the tax benefit that they would receive as well. But in an SMSF, when you get a property, very rarely do you flip it quickly. It does happen, but most people tend to, hold on to it for a while so that it's an ongoing income stream when they retire.
Correct.
And as opposed to, I will just sell it in a few years and then net my capital gain from that.
Yeah.
So
Generally, even if you net the gain, you can't touch it until you hit until you reach a condition of release. So,
that's correct. You need to wait till 60 to start, getting all the benefits of that. So,
I also think, why I don't see that often is because there's a general misconception as to if it's good or bad. And it is bad when you have interest only and you're not putting that capital into another investment.
Yeah.
Because if you're not doing that, you're going backwards. You're literally just going backwards because you're not reducing that debt. Especially because the debts in SMSF are generally smart debt, so that's fine. But that's the one mistake people make. Like if you go interest only on any of your investment properties, you want to ensure that capital, principal you would have been paying off is actually put into another investment, or you're going to pay that off as quickly as possible.
That's right. Yeah.
So that's the biggest mistake I'll say people make. And this can work even for your commercial property in an SMSF.
Yes.
If you decide to go interest only, you definitely want to ensure the principal is put into another investment, or you're definitely going to pay that off within 1 or 2 years and catch up.
That's correct. And one thing to note on that too is that unlike a normal home loan or a normal asset, a normal property, within SMSF, you can't access equity from your property until the entire property has been discharged or is no longer you're holding that title. So the some of the benefits of using interest only to then capital gain and take your equity out and go into a new investment property, that can't be done so simply within SMSF. So another reason why not as popular interest only.
Yes, 100%. So those are the small things that people need to know about when setting up an SMSF. But I think it works wonders for our business owners or people with a large balance in the SMSF. Okay. So in terms of the interest only, because I think it's a topic that many people don't know about, hence why we're drilling down on it. Yeah. In terms of the interest only loans, how does it impact cash flow and the long-term growth of the SMSF? What should trustees consider before choosing such a loan structure? Like, what would you be telling them? What questions would you be asking before you help them set up an interest-only loan within the SMSF, either for a residential or a commercial property?
Yeah. Wow, that's a big question. Many layers to that.
Take your time. There's definitely no rush with that. Or we can just start with the cash flow.
Yeah, it's almost one I would turn back to seek your advice on, because there's going to be tax benefits. There's going to be management of cash flow benefits from doing it in an SMSF or doing interest only. And then, why a commercial property instead of a residential property. All these investment decisions and returns because of that are what people would seek a financial advisor for, right? To then map out, hey, which course is going to help them achieve their long-term goals or short-term goals, whichever it's more their priority. And then, of course, speaking as well as an accountant on how the tax is going to come into play when you're claiming deductions on interest versus principal and interest, and what happens within the SMSF vehicle and what's outside of that, right? And so, it's almost one of them, like, And
I guess one of the things we do for clients is we definitely model out scenarios if they want to see what that looks like. From a cash flow perspective, what we also do is we ensure that you have a liquidity buffer in there. Just to ensure that if there's anything that comes up in the SMSF, you have some cash there. One of the things I also like doing with my clients is just really understanding the property. Is it a new property? Is it an old property? What exactly do you want to do? Because if it's an old property, you expect a lot more maintenance costs to come through. So all of a sudden, you need a bigger buffer in there, and really explain that, okay, once we get the loan, we can't do a top-up. We can then say, okay, yes, we want more money now. We want to do a construction. Or I want to do a huge renovation inside there. Those are things to be really aware of. And I think from the cash flow perspective as well, it's interesting because and I'll just use a couple as an example. If a couple is working and they've set up an SMSF and their SG contributions are going in, and they've also have a property that is rented out, rarely would they have small cash flow difficulties, because that SG really helps. And sorry, when I say SG, I mean superannuation guarantee contributions going in. that really helps, to make any payments, any small renovations that come out. And these days rental yield can range from anything from about 3 to 5%.
Yeah.
And then if you think about it, there's just a 2% buffer that is needed to pay that loan. So
on top of the interest
from a
rate.
cash flow perspective, it's just planning ahead, as you said, sitting down with the right professional, genuine financial planner to ensure that is planned for.
That's
Because
correct. Yeah.
most people don't really think that far ahead. I always like joking, I can see your future when I speak to people, because I'm like, look, I can see a few things that will come up, and it's
He
good
can, though. He's not really joking.
Exactly. Financial wizardry going on here. Wealth wizardry. So it's definitely good to just sit down and plan things out.
Yeah.
But,
and so then when it comes to the chat with a broker for setting up the interest only or principal and interest payments for through SMSF, that's where we're able to say, look, in the first 5 years, if you do interest only, your repayments are going to be smaller because it's just the interest portion. However, if beyond 5 years you go back to principal and interest, your remaining repayments after 5 years start to be really big, because you only have 25 years left to pay the whole principal off, unless of course you refinance or you move on and sell the asset.
Yeah.
So that's kind of where the broker will just help map that out. But that's more just putting the simple contrast between interest only and principal and interest, as opposed to which path to go down long term for your overall portfolio.
Yeah. I think one of the things with an SMSF that I definitely love setting up with clients, you need to deal with other professionals. If you want to do things properly, the things that that I don't know, and we need to sit down together and discuss. You need to get your accountant, your mortgage broker, financial planner in a room to really understand what's going on, what are your goals, how does everything play? Because from a financial planning perspective, the things that change every year.
Yeah.
Same with the brokers, same with the
rates change every year. Yeah.
Same with the accountant. So if people don't understand that, you might not be doing the best for yourself at that point in time.
Yeah. Build your A team. Yeah.
Sorry, I missed
Build
that.
your A team.
Yeah, exactly. Build your A team. Get your A team together. Yeah. So I guess one of the other things that I'm really keen to understand, and I've heard you say this from time to time, is what are the loan structures or loan services do you offer to small business owners? Things like just off the top of my head, overdrafts. How do those work? If you can give a few, that'll be really beneficial.
That's great. So in terms of everything that's non-residential, there's a big world of financial products out there. I'll probably start with what's most common, which is the getting a commercial property, right? And so there's two ways you can do it. You can either go and purchase a commercial property, and you can do it in your personal name or in your company's name. It all just depends on the finances you want to use at that point.
Correct. I always tell people on that as well. It depends on your exit plan.
Yes.
Because if you don't really want to hold that company long term, and might not be the best doing it in the company name. But
that's right.
That's a different topic. But anyway,
keep going. That's a huge one for another conversation.
Yeah.
But one of the more popular recent commercial products, actually, it's been around for a long time. It's what we call lease stock. So when you are purchasing a commercial property, right, your returns from that are primarily from the lease. Right, you're leasing a retail space out in a shopping center, an office, a warehouse to a business that's going to use it, right? And so that lease income that comes in, if that can cover the interest payments on a loan by a factor of 1.5, and the lease has more than 12 months left, you can easily get a 5-year lease stock for a property, which is to get that property, to purchase a property, instead of having to use your own financials and your own net profit to service the loan. You just get the lease income, and that's more than enough. So that's a cool way to get commercial property.
Yeah.
Also a way to minimize risk, right? Because commercial properties are it goes ups and downs with the market, and it's not always increasing in value.
Especially COVID and the last few years with everything going on. It's been, huge changes
and
there.
Working from home become a thing now, and so commercial valuations are not as in that trajectory the residential is. Of course, there's still lots of value out there. But so that's a kind of a different way to get and access commercial property, right? And so, it's just the different ways. Sometimes if there's that lease agreement in place, that's almost all that's needed for the bank to be like, 5 years, there you go. We'll give you that access to that property and you can purchase it. So that's commercial property. And then there's the world of there's small business lending, right? So I would break it down into maybe two categories just to make it easy. One is cash flow lending, and the other is asset lending, or cash flow finance and asset finance. Asset is easy to understand, right? And asset sits at the back of it. So for property, it's obviously that house or that apartment. For in business, it could be access to a vehicle, or it could be a specialized equipment like a dentist chair. It could be an excavator, depending on the type of business and what you use it for. And a lot of tradies would need access to vehicles, right? And so to then purchase a vehicle up front is a huge cost. Very often, businesses have revenues come, all sorts of receivables and payables, and it gets quite hectic all the time. And so instead of an upfront cost of paying 30, 40K for a vehicle, which could, really strangle the cash flow of a business, to spread that out over $500 payments per month over 5 years, that's much more manageable. And that gives that access for them to use the cash to focus on what the immediate needs are to grow the business, while the vehicle helps to make the business work. So that's vehicle and asset financing that we can assist with. And the other side of that is more unsecured lending, right? So there's no asset behind it specifically. It's more like a personal loan, but for the business. So in the business name, you're able to get what you would call an overdraft or a line of credit. And so again, just using the business finances to be able to borrow it's kind of like a credit card. Most people understand how a credit card works. But the terms are much more friendly than a credit card would be. And so when you again have a line of credit, let's just say it's 50K. When you withdraw from it, of course, that's when the interest starts getting charged. But instead of having to repay the balance in full like a credit card, you can leave it open for a couple of years and make the repayments slowly over time till it's paid off. So 2 to 4 years, depending on the lender. And if you've got a big inflow of cash coming, right? So let's say your cash flow is very volatile month to month. You can pay the balance back in full, and you're only charged on the days where you had a balance on that you have drawn out. So this has been a very popular tool. Interest rates are really high, so it's really hard to access cash now. Inflation too has made procurement, cost of goods, a big thing to manage. And so and then of course you got staff to pay, right? Your employees who work for you.
Everything adds up.
It all, bills as well, insurance and all that. And so therefore having this this buffer, this access to this line of credit, has been really helpful for a lot of businesses to stay afloat and to put their money where they can see the most growth happening without worrying about all their cash disappearing overnight.
That's amazing and good to know, because so many people don't know all these things. Like each time I speak to you, I learn something new, So it's been amazing having you on the show today. If viewers wanted to get in touch with you, Bobby, or the Loan Lounge, what's the best way for them to get in touch? They should probably be getting in touch with you for about loans, not whiskey, but look, if they want to reach out about whiskey, why not?
Both at the same time. No, one after the other. Loans first and then whiskey. That's the right order, not whiskey
great order.
before loans, unless you really want to have a good time. And so, look, the best way would be to go to loanlounge.au and reach out to us there. Or you can just Google Loan Lounge. Really easy. You would see us on Google Maps or online.
You see a good looking team come up. I've seen that when I've Googled you people.
That's right. To do that. Or again, have a chat to Victor, right? And Victor will be able to give you my personal details for a more if you want to run through a specific scenario, and I can help out with it.
Nice.
Yeah.
Nice. Thanks a lot, Bobby. So a lot to learn from today. Debt recycling, SMSF,
Yeah.
small business lending, those are the things that we've discussed, and really great tools or strategies to actually help people build wealth over time. So thanks for everyone who tuned in today, and thanks for viewing. Follow us on Elevate Your Wealth, and we'll get more interesting people on like Bobby to share the story and then tell us how we can build more wealth to help with our wealth, health, and relationships.